Hi, and welcome to this new series, right? So where we call this systems at work, right? That means we're going to be seeing systems doing their work, as well as we will also see some of the key points about systematic trading, right? And you could be somebody who's brand new to systematic trading, or somebody who's already been doing it, and you need that push to believe in systematic trading. So the goal of this podcast, or this whole series, is to just do that. So to begin with, there is always this debate between systematic trading and discretionary trading, right? So I would not just go and jump into that, in a way most people do. I'd say both have their merits and demerits, right? Both the ways of trading have their own ups and downs, and their own advantages and disadvantages. But being a systematic trader myself, I'm biased towards systematic trading, right? I have my own biases, and that is personally because of the results that I've seen personally in my account, right? The difference between my discretionary efforts and systematic efforts is there's a very big stark difference, right? So that being said, the biggest question is what suits a person as a trader, right? What suits me is systematic trading, and there are a lot of people who choose systematic trading and they just stick to the guns, and they just focus on the process than the results, right? And there is this other world of discretionary trading where we need to develop the skill of timing the market and predicting the moves, and there is a lot of people who make good money doing that as well, right? But it's just a preference of what might work for you and what might not work for you, right? Because this is a game where only a few make it, right? If we can give ourselves that full chance of the highest probability of making it as a successful trader, I'd say systematic trading would be much easier for people to get started with, right? And maybe they would have an approach where they mix the discretionary and systems, but again, that is something that I would avoid, right? The fundamental thing about discretionary trading or systematic trading is we embrace stillness, we embrace balance in systematic trading, right? So which is the opposite of fear. I always believe that fear is what drives the prices, right? So many say it's greed and fear that moves the market, right? I'd say it is only fear, right? Either the fear of losing, which is the fear, or the fear of missing out, which is greed, right? So fear is the fundamental emotion that drives the prices, and there are a lot of various forms of fears, and that that results in traders doing all things wrong, right? So particularly when we are supposed to take a lot of decision in fraction of time, and particularly when these decisions affect our money on the line, right? So we put our hard-earned money on the line, and when we see these M2M swings, the ups and downs, our decisions going wrong, it is difficult for us to control that a little trigger of fear. So the opposite of fear, I'd say, is not courage. It is a state of balance, a state of stillness, and that is what systematic trading gives us, right? When we adopt a rule-based approach, where we switch off our minds, right, switch off our smarts, and we trust systems and we trust probabilities to do its own thing, and we let the market happen, right? As you can see, maybe some part of the screen, we do not know where the markets are going, right? The markets are very good at doing one thing, which is to make fool of as many as possible, right? So our goal is not to be one of them, right? So any time-based systems, or trigger-based systems, indicator-based systems, right? So whatever you see on your screen right now, this Zerodha account is a completely time-based, right? So there are multiple entries, multiple legs, and the other side we have indicator-based a trend following system, right? So that's its own job. And the part about being systematic is that we do not know where the markets are going. In fact, we just surrender to the flow of the market instead of trying and predicting what is going to happen tomorrow, the next day, or the next week, right? So this balanced state of mind is, kind of difficult for a lot of people, and it is very boring, right? As you can see, there's nothing much to do, right? Systems at work, systems are doing their work, and if there is any trigger, maybe we can act upon it, or we take decisions totally on a objective manner, and there's no subjectiveness involved. So what it essentially does is it removes a lot of impulsive reactions. One of the biggest reasons why people are not really successful, right, in trading is, as we know, this is the act of acting on impulses, impulsive trading and compulsive trading. And people glorify it in the name of firefighting, right? Firefighting for me is just a glorified name of revenge trading, right? Because something is going wrong, that means you're taking revenge on the market and trying to put a control over the price movement, right? Instead, if we can find an approach where we just say, we just exit at some point with a stop loss and let the market happen, right? So that let us wait for the next week to come, and let's just take the trade again. And in the long run, probability is going to favor us, right? So systematic trading is all about thinking ahead, right? But acting right now based on our own set of rules, back tested, and understanding the power of large numbers, and just letting letting the emotions settle down and not doing anything. And so the one of the most difficult parts as human beings is that sitting out and not acting upon when there is a need is difficult for many people to achieve, right? Systematic trading gives us that opportunity to do that, where you're almost getting paid for controlling your emotions, right? This business of trading, I'd say, we are not in the business of predicting the prices, or we are not in the business of timing the market. Here we are in the business of controlling our emotions, right? So we put ourselves in that minority who do not just act upon random price moves of the market, because that is what market does, and that is what the market is supposed to do, right? And at any point, at every point, there are people, thousands of them, believing that this is the right time to buy, and at the same time, there are thousands of people who believe that, based on their technical or based on their discretionary knowledge, that it is the best time to sell, and somebody thinks it's the best time to buy, right? So that is the way this thing works, and this is a marketplace of chaos, and systematic trading is trying to bring in some kind of an order in this chaos, right? Derivatives trading itself is a leverage instrument, right? So when people talk about stock market being a chaotic place, or a place where money can be lost easily, futures and options or derivatives is almost like 4 times higher. The chances of losing money is 4 times higher. The chances of making money is 4 times higher. And we are dealing with a leveraged instrument already, right? So the need for order is more here in derivatives than in the equity trading, right? So the idea of, the primary idea of firefighting, the primary idea of adjustments maybe will suit a lot of people who can do that with a lot of discipline, and who can, with the help of technical analysis, can in a way do this in a disciplined manner. But for most others, right, discretionary trading could be a way of learning things or perfecting an art which cannot be perfected, right? We can draw all the things on the chart, and we can say, if this happens and that will happen, right? And all of this is just a a journey that is taken up by people who wants to go move into a zone of perfection, right? So, but systematic trading, on the other hand, we surrender, right? We go into a zone of surrendering. We understand that we cannot time or predict the market, and we just go with the flow, and we believe in probability. We believe in probabilities and leverage and luck, right? So all of this work hand in hand and get the results that we want. And the results and the expectation is that if we can bring to the table a slight bit of edge, that is all it takes, right? It does not does not matter that we are so good at predicting the markets, right? It does not happen that way. We are just bringing that edge of discipline, bring that edge of money management, and bring in the edge of sitting down without doing a thing, right? And this is something that goes against our primary human mind. The way it works is, most probably we all have worked or do work, or we are in an environment where we need to do troubleshooting or firefighting to a lot of things, right? So when there is a panic button that is pressed, there has to be some action from our side. But in systematic trading, it's going against the flow. If there is something going wrong, the stop loss is hit, and we literally do nothing about it, right? As you can see, the moves will trigger, and there will be a lot of M2M swings, and we are getting paid to endure that and keep doing the same thing over and over again for long periods of time. So making money here is most part, right, is the psychology, and maybe 20% is the system, right? And system or the strategy that we follow. But the focus for most people is finding that system or finding that strategy. We could make money with any half-baked system, provided that it is proven to work. It provides a certain edge. Maybe it is, it has to have some logic of maybe it is a breakout trading, or it is a trade where you just sell options with a stop loss, or something that makes sense, right? So it has to make money either by option selling, capturing the theta decay, or capturing a move. Opening range breakout is a simple system that still works to the date, right? So the idea is that the system is not that important, right? The way we execute it, the way we are disciplined with it, and the way that we give the system enough time for it to do its own thing, right? A system could go into a phase of drawdowns, right? Where it is not giving us enough money, or where it is not, the markets are not conducive for that particular system at certain points, certain weeks. It could be extending for 2 weeks or 3 weeks. That is when most of the discipline is put to test as a trader, as a systematic trader. Everything, the whole system and the trader, they are put into a stress test for some period of time. And if we can just hold on without changing the system, without changing the rules, without changing the initial conditions, and if we can teach ourselves to play time, right? And that is going to make a huge difference, right? So this video, right? So this particular session was just to serve as an introduction to systematic trading and the ideas, that goes behind the systematic trading, right? So there will be a lot more videos on this, maybe particularly about strategies and on things that can help us sit tight and do nothing, right? So good luck to all of you, right? So you can see that this week ended, and of course this week or the last week and the week before that were particularly good for the systems, right? So one is a trend following system, and other is just a plain vanilla option selling system with a stop loss. And let's see, I'm just planning to do this for the next maybe about 25 weeks. So you will see how this all pans out in the end. And for me, it is just about sticking to the rules and bringing in some kind of accountability here, right? And we let the market do its own thing, and we will go with the flow, right? So good luck. We'll meet you again.